In the history of modern economics, we are taught that efficiency is king. We are told that scaling up, buying in bulk, and leveraging assets is the only way to build an empire. But in 2008, the world's most sophisticated empires, built on algorithms and derivatives, crumbled into dust overnight. Trillions of dollars evaporated, leaving skyscrapers full of empty offices and experts scratching their heads. Yet, amidst that global wreckage, a tiny, seemingly primitive business model didn't just survive, it thrived. This is the story of Julian, a man who thought he mastered the universe, and Maria, a woman he laughed at. It is a story about why a $1 million algorithm failed, and why a 10-cent packet of soy sauce succeeded. Let us take you back to early 2007, a time when the financial world was drunk on optimism and cheap credit. Julian Vance was the archetype of this era, a 32-year-old senior broker at a mid-sized but aggressive firm in downtown Manhattan. He wore $5,000 bespoke suits, not as a display of vanity, but as armor for the battlefield of Wall Street. Julian didn't just trade stocks. He traded complex debt obligations, slicing and dicing risk until it looked like risk didn't exist at all. To him, the world was a spreadsheet. If a number didn't contribute to the bottom line immediately, it was an inefficiency that needed to be ruthlessly eliminated. He lived in a penthouse that he was barely in, drove a car he rarely drove, and possessed a net worth that was almost entirely theoretical, locked up in the very market. On the other side of the world, in a dusty, humid Burundi on the outskirts of Manila, Maria Santos operated out of a structure that defied every architectural code in New York. Her Sari Sari Store, which literally translates to variety or sundry, was an extension of her living room. It was a chaotic, colorful box roughly 2 meters by 3 meters, caged in by with slats and chicken wire prevent theft while allowing conversation. Maria didn't have a degree in economics. She had a ledger notebook with dog-eared pages and a mental map of every neighbor's payday. Her inventory wasn't stored in a warehouse. It was hanging from the ceiling in single-use packets. To an outsider, it looked like clutter. To the neighborhood, it was a central bank, the grocery store, and the community center rolled into one. The collision of these two worlds happened in May of 2007, when Julian was sent to the Philippines to scout emerging market opportunities for a heavy infrastructure fund. He was miserable, sweating through his linen shirt, hating the humidity, and despising the traffic. His driver pulled over Maria's Barongarie to fix a flat tire, leaving Julian stranded for an hour in the heat. Seeking a bottle of water, he approached Maria's store. He stood there, wiping his forehead with a silk handkerchief, looking at the hanging garlands of single-use shampoos, singular garlic cloves, and repackaged cooking oil sold in tiny plastic bags. He didn't see a business. He saw poverty management. He saw an inability to scale. He saw everything he had been taught to despise in business school. Julian bought a lukewarm soda and leaned against a wooden counter, his curiosity piqued by what he viewed as a tragic inefficiency. He asked Maria, in his clipped, fast-paced English, why she didn't buy in bulk to save costs and sell in larger quantities to increase margins. He pulled out a pen and actually started sketching a graph on a napkin, explaining that selling a single cigarette or a pinch of salt was a waste of labor hours. He laughed, a short, derisive sound, telling her that in New York, a business operating like this would be eaten alive by lunch. He told her she was working 10 times harder for 10 times less profit because she didn't understand the concept of economies of scale. Maria looked at the graph, then at Julian, with a patience born of raising 5 children and managing a neighborhood's hunger. She smiled politely, but her eyes were sharp. She explained to him that her customers were tricycle drivers, laborers, and laundry women who earned their money daily. They couldn't afford a bottle of shampoo that cost 200 pesos, but they could afford 5 pesos for a sachet to wash their hair today. She told him that she wasn't just selling goods, she was selling accessibility. She explained that her inefficiency was actually an adaptation to the reality of her customers' cash flow. Julian shook his head, tossing the napkin into a bin, convinced she was trapped in a poverty mindset, unable to see the big picture of global commerce. When Julian returned to Wall Street, he used the Sari Sari Store as a punchline during a dinner with his partners at a steakhouse in Tribeca. He described the primitive nature of the micro-retail economy, contrasting it with the brilliance of their new mortgage-backed securities. He boasted about how they were bundling thousands of bad loans into high-grade bonds, effectively doing the opposite of Maria. They were taking granular trash and turning it into bulk gold. The table laughed, toasting with expensive wine, celebrating their cleverness. They felt untouchable. They were the masters of aggregation, convinced that bigger was always safer, and that bundling risk made it disappear. They didn't realize that by tying everything together, they were creating a single point of failure. Throughout the rest of 2007, the disconnect between reality and financial perception widened. Julian's portfolio soared. He bought a second apartment, this time in Miami, leveraging his bonuses which were paid in company stock. He was completely liquid on paper, but remarkably illiquid in reality. His lifestyle demanded a constant stream of high-value cash flow to service his own debts, his mortgage, his car payments, his club memberships. He was living exactly how he told Maria not to operate. He was buying in bulk on credit, assuming the market would always rise to cover the spread. He had no cash reserves, only leveraged assets. He was efficient, streamlined, and maximized with zero margin for error. Back in the Barangay, Maria was doing something Julian would have found capable of firing a CFO for. She was extending credit based on character, not collateral. Her famous list system allowed neighbors to take rice and sardines on Monday and pay on Friday. It was a high-risk system on paper, but Maria knew things an algorithm didn't. She knew whose husband had stopped drinking, meaning he would have money on Friday. She knew whose daughter had just gotten a job at a call center, meaning the family's creditworthiness had just tripled. Her risk management was intimate and biological. She kept significant cash reserves under her mattress, not trusting the rural banks, a move Julia would have called dead money, losing value to inflation. The cracks began to show in early 2008. In New York, the whisper started in the break rooms. The subprime mortgages that Julian had bundled and sold were beginning to default. At first, he dismissed it as a market correction, a blip in the algorithm. He doubled down, buying the dip, convinced that the models built by PhDs in physics couldn't be wrong. But the complexity of the instruments he traded became their downfall. No one knew what was actually inside the bundles anymore. The trust evaporated. In the Sari Sari Store, trust was the only currency that mattered. When a typhoon hit the province that year, damaging crops and slowing the local economy, Maria didn't foreclose on her neighbors. She adjusted the portion sizes, selling even smaller amounts, adapting to the shrinking wall of the community. The narrative of efficiency began to rot from the inside out. Julian's firm, leveraged 30-1, suddenly found itself unable to borrow overnight funds to meet its obligations. The bulk model of finance relied on a frictionless flow of massive amounts of capital. When that flow stopped, the beast starved. Julian spent his days screaming into telephones, watching the ticker tape bleed red. The irony was palpable. The man who mocked the selling of single cigarettes was now desperate for a single viable asset he could liquidate. But he couldn't sell his assets tingi piece by piece. They were locked in massive, toxic bundles that no one wanted to touch. Then came September 2008. The collapse of Lehman Brothers sent a shockwave that shattered the glass walls of Julian's reality. His firm was exposed. The stock that made up the bulk of his net worth plummeted to near zero. The credit lines for his mortgages froze. He received a margin call on his personal accounts that wiped out his savings in an afternoon. Julian sat in his office, the air conditioning humming a low drone, staring at a screen that told him he was effectively bankrupt. The efficiency he worshipped had turned into a trap. He had optimized his life for a perfect world, and now that the world was imperfect, he had no buffer. He was a dinosaur watching the meteor fall. The recession rippled outward, hitting the Philippines, though differently. Exports slowed, and remittances from overseas workers dipped. In Maria's neighborhood, factory workers were laid off. Construction projects halted. Cash became scarce. The supermarkets and big box retailers in the city saw their sales plummet because people could no longer afford to buy a whole bag of rice or a full bottle of oil. The efficient bulk model failed because the consumer no longer had the capital to participate in it. This was the moment where the Sari Sari model moved from being a convenience to a lifeline. Because the neighbors could no longer afford the supermarket, they flocked to Maria. The tingi culture that Julian had laughed at became the only way the economy could function. People bought cooking oil by the cup. They bought 3 eggs instead of carton. They bought single diapers. Maria's transaction volume didn't drop. It tripled. Her profit margins per unit were actually higher than the supermarkets. And because she turned her inventory over daily, she had constant cash flow. While Wall Street was freezing because no one could move billion-dollar assets, Maria's economy was fluid because it moved in 5 peso increments. Maria's lista became the localized quantitative easing of her community. Because she had hoarded cash under her mattress, that dead money, she had the liquidity to restock her shelves when the wholesalers were desperate for cash and offering discounts. She absorbed the shock that the big banks couldn't. She knew that her neighbor, the carpenter, had lost his big contract, so she let him pay in services, fixing her roof in exchange for rice. It was a barter system, primitive and robust, immune to the collapse of the dollar or the credit default swaps in New York. The community insulated itself through interdependence, while the global financial system fractured from its own complexity. By early 2009, Julian had lost a penthouse. He had lost a car. His wife, accustomed to a lifestyle that was no longer possible, had moved back to her parents. Julian was living in a studio apartment in Queens, taking the subway, stripped of his armor. He was in a state of shock, unable to reconcile how a man with his intellect and tools could lose against a market he was supposed to control. He spent his nights drinking cheap whiskey, replaying the crash, trying to find the variable he missed. He kept thinking about leverage. He kept thinking about how fragile big really was. In a twist of fate, Julian found himself working as a consultant for a restructuring firm dealing with distressed assets in Southeast Asia. It was a humbling step down, but he needed the money. He returned to the Philippines in late 2009. The landscape had changed. The flashy condos that were being built in 2007 were half-finished skeletons. The mood was somber. But as his car drove past the same barangay where he had stopped 2 years prior, he saw something that made him tap the driver on the shoulder and ask him to stop. Maria's Sari Sari store was still there. It wasn't just there. It had expanded. She had added a small awning and a couple of plastic tables where people were eating noodles. The structure was freshly painted. While the skyscrapers in Makati had empty floors, Maria's wooden box was buzzing with life. Julian got out of the car. He wasn't wearing a suit this time. He was wearing a wrinkled polo shirt. He walked up to the window. Maria didn't recognize him at first. He looked 10 years older, his arrogance replaced by a hollow exhaustion. But when he ordered the same soda, the recognition flickered in her eyes. "You're the man with the graph," Maria said, handing him the bottle. Julian nodded, a ghost of a smile touching his lips. He looked around the store. He saw the same sachets, the same small portions. But now, he looked at them with different eyes. He didn't see inefficiency anymore. He saw resilience. He saw a business model that was built for the worst-case scenario, not the best-case scenario. He realized that Maria hadn't optimized for profit. She had optimized for survival. And in a world that had just gone to hell, survival was the only metric that mattered. Julian stayed for a while, sitting on one of the plastic stools. He watched the commerce flow. A child came to buy a single candle because the power was out. A man bought a single stick of gum. It was microfinance in its purest form. Julian realized that his Wall Street model assumed stability. It assumed that tomorrow would be like today, only better. Maria's model assumed chaos. It assumed that tomorrow might be a disaster. So we must be able to survive on the smallest possible unit of trade today. He struck up conversation with Maria again, but this time he didn't lecture. He asked questions. He asked her how she managed her cash flow during the height of the crisis. Maria explained that she never spent money she didn't have. She explained that when the big delivery trucks stopped coming, she hired local tricycles to pick up goods from the market. She was agile. She told him, "Sir, big trees break in typhoon. The bamboo bends. We are bamboo." Julian felt a lump in his throat. He had been a mighty oak, stiff and proud, and he had snapped in half. This realization hit Julian with the force of a physical blow. The financial derivatives he traded were abstractions of abstractions, so removed from the underlying asset that they became fiction. A Sari Sari store is the opposite of fiction. It is the most tangible reality possible. If the customer doesn't have the coin, the transaction doesn't happen. There is no bubbling, no hiding bad debt. It is brutally honest. Julian realized that the recession was essentially the world waking up from a dream of infinite wealth and crashing back down to the reality of the Sari Sari store. You can only consume what you can actually pay for. Julian returned to his hotel room that night and wrote a report not for his firm, but for himself. He titled it The Economics of the Sachet. He wrote about how the poor pay a premium for liquidity. It costs more per milliliter to buy shampoo in a sachet than a bottle, but that premium buys them flexibility. He realized that the entire global economy had crashed because it lacked that flexibility. Banks were too big to fail, which meant they were too big to pivot. They were locked into a bulk buy trajectory that led off a cliff. In the years that followed, the tingi economy didn't just stay in the Philippines. The concept began to permeate the tech world. Julian, eventually rebuilding his career in fintech, started seeing the Sari Sari principle everywhere. Subscription services, microtransactions in video games, pay-as-you-go cloud computing. It was all just the Sari Sari model digitized. The world was moving away from ownership in bulk, buying the software CD, to accessibility and flow, paying a monthly fee. Maria had been pioneering the software as a service model with cooking oil decades before Silicon Valley coined the term. Maria continued to run her store for another decade. She sent all her children to college on the profits of 5 peso transactions. She never franchised. She never took out a business loan to expand into a grocery store. She kept it small, manageable, and human. When the next crisis hit, and the next, she remained standing. She understood something the economists often forgot. The economy is not made of numbers. It is made of people. And people, when stripped of credit and pretense, live life one day, one meal, and one sachet at a time. Julian eventually visited Maria one last time years later. He was back on his feet, wealthy again, but different. He was cautious. He kept high cash reserves. He didn't use leverage. He walked up to the store, which was now being run by Maria's daughter, though Maria sat in the back, gray-haired and watchful. He bought a sachet of instant coffee. He told Maria, "You were right. The math on the napkin was wrong." Maria just laughed, the same warm, knowing laugh. "The math was fine, sir," she said, "but life is not math." The story of the Sari Sari store and the Wall Street broker is more than just an anecdote about retail. It is a parable for the modern world. We are obsessed with optimization. We want to remove all friction. But friction is what gives us traction. The inefficiency of the Sari Sari store, the chatting, the small transactions, the manual ledger, was the friction that kept community from sliding into the abyss when the smooth pavement of global finance turned to ice. Julian learned that resilience is more valuable than efficiency. Efficiency is fragile. It works only when conditions are perfect. Resilience is messy. It has redundancies and buffers, but it works when conditions are hell. The Sari Sari store was resilient because it was decentralized and disconnected from the toxic assets of the global system. It was an island of reality in a sea of speculation. Today, if you walk through that barangay, the store is still there. If you walk through Wall Street, the name of Julian's old firm is gone, scrubbed from the building, replaced by another entity that will likely make the same mistakes in the next cycle. The Sari Sari model survives not because it is powerful, but because it is essential. It survives because it honors the scale at which human beings actually live. So, the next time you see a small business doing things the old way, or you see a neighbor selling goods out of their garage, or you scoff at the price of a single unit convenience, remember Julian. Remember the man who thought he could outsmart the market with leverage. And remember Maria, who knew that in the end, the only thing that counts is what you can hold in your hand, pay for with a coin, and use today. The world is unpredictable. Recessions come, bubbles burst, and empires fall. But as long as there is a need for a single pinch of salt, a single candle in the dark, or a single moment of human connection across a wooden counter, the Sari Sari Store will remain. It is the unshakable foundation of the economy, standing tall while the skyscrapers sway in the wind. The broker laughed, but the store is still open,